Welcome to Drill Down Earnings. We have quarterly results out from IBM, that master of services and software and consulting, but hitting a rough patch here. Let's talk about that. I'm the Chief Market Strategist for Epistrophy Capital Research, Cory Johnson. This is the business story behind one stock on the move, and the stock is certainly moving here. Q3 earnings, Wall Street likes a beat or a miss, and this was both a beat and a miss, so we're just going to kind of call it in line. But 1505 in revenues and 15.05 billion in revenues, $2.23 in earnings were the expectations. Well, instead, what we got from this company was 15 billion in revenues, and a little bit better than we would have expected in earnings per share. But we want to dig into the business here. What's really going on beyond the miss and the beat, as I said. So 2% revenue growth, 1.5%. I'm going to round up to be kind, but 2% revenue growth, just not fantastic for this business. And when we dig in behind the headline numbers, we see here as a business, their EBIT margins are just collapsing. 11% operating margins in this business, but that is a negative 15% change on a year-over-year basis for operating margins. So operating margins just collapsing. And while their biggest business is certainly software, mainly because of their acquisition of Red Hat all those years ago, and their infrastructure business is still big, the big red spot on these results, and I've been talking about this for a few quarters, is consulting. It was 34% of their business, but it is fading. The other units aren't doing great, but the consulting business is just shrinking right now, and it's just not good. It's not what you'd expect. In a world of AI, you would think that these guys are getting lots of calls from their clients saying, figure out how we can use AI. Certainly IBM likes to talk about that, but it's not showing up in the results. Now, I will say positively, the software business did increase by 10%. Lots of talk of that in their press release. Shocker. They want to wave the flag when one thing's doing well, which is software, is certainly the biggest thing for them. But the consulting business is a concern because you would think it'd be growing here. Now, how did the stock react when the numbers came out? The stock was down 3%, but after a fantastic year, up 71%. So, you see a 71% increase in the stock and a 2% increase in revenues on a year-over-year basis. You see, so therefore there's concern about what might happen in the near future, especially with the problems in the consulting business. Here's what CEO Arvind Krishna had to say on the conference call today.
On your consulting side, while the last year, and if I go more than 4 years ago, have been flat or negative, the confidence we're getting there is from the quality of the signings and from the yields that we expect. The overall signings this year have been lower than last year. But if those signings didn't yield, then they don't mean very much. So it's the yields we worry about and the backlog that we get that we worry about. And we are seeing those begin to turn. Note, I'm using the word begin to turn. I don't expect consulting to inflect like software and go into double digits, but I do expect it to turn into a tailwind for us in terms of being positive growth as we are going. That's why I believe this may be a tale of two halves. The consulting may be very modest in the first half, but much better in the second half, based on what we can see in terms of the signings, the offerings, and as the Gen AI book of business turns into real revenue across all of our clients.
So that's what we hear from Arvind Krishna. But again, what's our big takeaway? What do we want to remember about these important results from IBM? What's our one number that tells us a whole lot? I've got all that. Think about this in terms of a summary. So Q3 earnings, your essential summary of Drill Down earnings summary here, is that IBM delivered a quarter where they're just not growing that fast. 2% revenue growth, I should say, 1.5%, we'll round it up to 2%. But maybe the most important number to take away here, Drill Down earnings bite, the one number that tells us a whole lot is 0.5%. That is the shrinkage in the consulting business, which is faltering here and is a great concern. We've been talking about it for a few quarters now, but you can see in the numbers, it's not good. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson.